Good morning, and thanks so much for tuning into the trade setup. I'm Neeraj Shah. It's an interesting morning to take stock of because for most part of the weekend, I was under the assumption that we will not have a really strong day. Let's see if the markets prove me wrong. The global news flow first. Oil dropped after Hamas released two U.S. hostages and Israel delayed the Gaza attacks. U.S. stock futures have edged higher ahead of big tech earnings. South Korea, US, and Japan are going to hold joint aerial drills as per Yonhap. And US has released declassified images of unsafe, quote unquote, unsafe encounters with Chinese fighter jets. I tell you, we focused on geopolitics happening in the Middle East. There is geopolitical tension building elsewhere as well. US stocks didn't have a great day, by the way, on Friday's session. Yet again, it was a sea of red with 1.53% for the Nasdaq, S&P down 1.26, Dow down about 1%. The only respite, if you will, that after hitting 5%, the 10-year yield cooled off a little bit, 4.96 currently. By the way, I must say, even gold has come off a little bit. So the safe haven move of the US Treasury, gold, etc., has all come off. So oil is down, gold is marginally lower, US 10-year yields are off from the 5% mark. Does all of that lead to some bit of a respite? Well, surprisingly to me, the gift nifty apparently shows a positive sign this morning, 19484. Let's see if this lasts, because to my mind, the trade setup, the market looks skittish and are very unlikely to find a very strong rebound level today. But as I said, that I might be proven completely wrong because the gift nifty is already showing a sign of a marginal uptick. Let's see if this builds up. I'll be happy for the bulls if it builds up. Somehow I think the scenario doesn't look or point towards any major optimism, if you will, as yet. In fact, the banking commentary is talking about even further lower NIMs and is likely to weigh on the banking stocks. Keep in mind, in Friday's session, viewers, the private banking index was the only index which had held out. And I know that private banks have been guiding towards lower NIMs for a while now, but I still think that the uniform commentary from all banks in terms of what's happened in the quarter on the NIMs and what could happen in the quarters ahead of the NIMs might just be something that might not sit well. The only respite, I must say, is that, and for a select band of people already, not just yesterday, but for the last few days, is that this is now getting factored in the pricing of some of the private banks and the valuations that they are trading at. So let's wait and watch if indeed the market agrees with that. For now, I think that there is, maybe some bit of commentary overhang on some of the private banks. Let's see if the valuations come to the rescue. From most conversations that I have, power as well as capital marketplace continue to be the pockets of hiding. You could argue that some real estate and ancillaries also fit that bill, but largely it is these. It's not a very heavy results day, and therefore in terms of results to come out today, and therefore I'll quickly move to the stocks that should be focused on. Now, I haven't quite given the graphics for Credit Access Grameen, but that certainly was one name to watch out for. So do keep in mind that stock. Then for the big boys, I'm starting off with the brokerage recommendations first, and then I'll come to the smaller names or relatively smaller names or relatively less traded names as opposed to the larger ones. So 197 or Paytm numbers and the phone call. Post that, Bernstein has a outperform rating with target price of 1100. They say that continued strong growth, stable margins, and progress towards PAT level profitability is now looking certain. The payment growth remains healthy. The value of net payment revenues are growing at 60% YOY. The overall EBITDA margin improved, led by higher share of lending revenues and QOQ stabilization of non-direct expenses. Clearly, is some favor that Bernstein has with Paytm and kind of sums up what happened in the quarter. Strong growth, stable margins, payment growth looking healthy, value of net payment revenues growing by 60% YOY. That was some in substance of, I think, Paytm's quarter. Let's see. I mean, it's trading really well, northwards of 950, if I'm not wrong. Paytm. Let's see how it trades moving ahead. Then the banking names. ICICI Bank, Jefferies has a buy with a target price of 1250. Look at the contours of the report. It's a profit ahead of estimates with a tad better NII and lower credit costs. And management is confident about the quality of retail unsecured loans, which is a respite. But the NIMs compressed by 25 basis points as expected and should go down 20 pips over the next 2 quarters. So they say that they see lower NIMs and higher credit costs, but the bank could still deliver 18% ROE in FY25, which leads them to having this bullish view. Then Morgan Stanley on Kotak Bank, equal weight rating with a target price of 2250. They say it continues to deliver on asset quality, growth, and profitability. The deposit growth remains strong, which is 4% QOQ, 23% YOY, versus a 22% YOY last quarter. The potential for operating leverage remains strong, according to Morgan Stanley. The capital market trends have picked up and expected to sustain strong earnings as a result of all of that. So Morgan Stanley is an outlier, if you will, because most of the other notes, I must say, have spoken about some bit of skittishness around Kotak Bank, despite the new MD CEO announcement as well. It's a bit of a generational shift, if you will, in Kotak. Would be interesting to see how it shapes up. Now, the point I was making about lower NIMs, look at what Kotak has said in the con call. The drop in NIMs of 14 to 15 point bips is due to CRR impact and liquidity buffer. NIMs will reduce going forward. The cost of deposits is up by 20 basis points, with the yield on advances remaining stable. Alert is that ICICI Bank also expects margins on NIMs to moderate further from Q2 levels. Viewers, keep all of this in mind. The point being, if you are a trader and a very short-term trader, then I don't quite know whether banks give you a bang for the buck if you buy them, and that is lies the overhang. Sure, if you're a long-term investor, some of the valuations look extremely attractive for the private banks in particular. So keep that in mind. RBL Bank came out with very good numbers. I thought I should bring the trading move on RBL Bank as well. So MK Alternative has put out a note where they say the stock will maintain a positive zone above the 238 level and resistance at 250 to 252 level. There are heavy longs added since September end. The OI for RBL Bank is at $176 million, above the one-year average of 97, plus 2.3 standard deviation. Massive longs already existing in RTL. If indeed the stock sees further up move ahead, you've got to be prepared for some bit of these longs, even booking profits. So bear that in mind. So that's the view on RBL. Then the results for JSW Energy look solid. Revenues up 36%, EBITDA 111% higher, margins at 57 versus 37, and PAT up 87%, reported net profit at 87% higher at 856 crores versus 456 crores. The company's been guiding to strong numbers, and you couldn't find too many faults there. Some other strong numbers include Lloyd's Engineering, wherein margins improved dramatically, as a result of which the net profit was up 46%, or TANFAC, both of which reported single-digit revenue growth but margin expansion. In TANFAC's case, the PAT was up about 33%. KFIN, revenues were up 15% QOQ, and the margin improvement again was very strong, 38.8 versus 31.92. PAT was up 41% at 61 crores versus 43 crores. Watch out for this one too. Shilchar Tech had some good numbers. Revenue sales up 78%, revenues up 78%, EBITDA margin at 28% versus 17%. PAT up 167% at 24 crores versus 9 crores. Really strong show. Sterling Wilson Solar, Sterling Wilson Renewable Energy, new name, but very strong quarter. Sales up 143%, EBITDA at 1 crores versus EBITDA loss. Net loss narrows from 297 crores to 57 crores. They're showing a trend, viewers. If you just look at our website, the BSE screener, you just see the trend changing for Sterling Wilson Renewable Energy. It's a stock that was up about 5%, I think, on Thursday as well. Watch out for this one. Could well be the standout performer. L&T Finance Holdings, again, not a bad quarter, I thought. Total income up 7%, NIMS at 10.84 versus 8.43, PAT at 46% higher at 595 crores. Strong showing, may react. Sasken, I'm not completely sure whether the PAT number downtick, but everything else looks solid. QOQ, revenues up 4%, EBIT up 70%, margins improved so strongly. I would reckon this stock could do well today despite the PAT downtick. Amber Enterprises, the PAT downtick is because of the uptick in interest costs and higher depreciation. So revenues up 23%, looks okay, but lower than estimates. Margins at 6.42 versus 4.8. I must say in that business, expanding margins is difficult. Amber has managed to do that, so that is kudos to them. But the net loss is because of, as I said, the higher interest cost. Tejas Networks left a bit to be desired despite the strong uptick in revenues, because EBITDA down 39%, margins 3.27 versus 9.79, and a net loss of 12.64 crores versus a loss of 3 crores. Clearly left a bit to be desired. Sharda Cropchem, sales down 20%, EBITDA down 67%, EBITDA margin at 4%, loss at 28 crores. Howler of a quarter should react to these numbers. Very likely will go down. So watch out for both of these, but Tejas has the advantage of higher revenues. Sharda doesn't have that either. Adani Green Solutions received, Adani Energy Solutions received smart meter LOAs worth 17,000 crores. So do watch out for that one as well. Now there is a query about whether should we buy big banks like ICICI, HDFC Bank with a 1-year time frame. Vasu, I can't give stock calls to be honest, but most notes and sales notes that I've read speak about how maybe there's a quarter or two of pain, but from a valuation perspective, these banks look very attractive. I'm going to be doing a short piece today on what's happening in BFSI and the argument between private versus PSUs as well. Maybe that will help you give an answer, get an answer. But yes, most notes that I read speak about how, from a valuation perspective, it's a great time to be logging in to some of these private sector banks. They may not be the blowout winners, but valuation is in your favor, and that is what you always need when you want to make an investment bet. Now, whether it's 1 year, 1.5 years, 2 years, I'm no one to say, but most sales notes, most brokerage notes believe that even from a 1-year perspective, it's not a bad call. Interesting day in terms of results and conversations on BQ Prime today. Of course, Gautam Trivedi, co-founder and managing partner of Nepean Capital, very smart cookie, joins in at 9:50 a.m. to talk about his thoughts and some high-frequency indicators. So that's the talking point conversation today. Shekhar Patel, MD of Ganesh Housing, joins in to talk about their quarter. Remember, they have a lot of different sets of businesses and triggers which give them numbers. So do watch out for that conversation as well. Then there is Dr. Satyanarayan Chava of Laurus Labs at 12 p.m. today after not so great quarter. Kotak has downgraded or kept the stock lower with a target price of 270. So watch out for this conversation. At 12:20, not 12:20, maybe 12:30, you will hear Ajit Venkatraman, MD of Phenolics Industries at 1 p.m. IDBI Bank joins in to talk about their quarter, so do try and tune in for that as well. And of course, a clutch of market conversations during the day, including Ask PQ and the FNO show at 11:30 a.m. Ask PQ, of course, and the FNO show at 10:30 a.m. with Osho Krishnan, my colleague Agni. Thanks so much for tuning in, the Trade Setup viewers. Have a great day, and to everybody who I might not meet again for the day, rest of the day, wishing you a very happy Dashera.